Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it is Friday already. Can you believe that? I can't believe that it's already Friday. And we got a big options expiration day today. So, like, it could be interesting today. I mean, it might just get pinned and get kind of boring, but it's been a crazy week. There's been a lot of moves. We might get some surprises today, I think. So, let's start some music over here. Hold on. Pull up some lo-fi. Go over to the charts. Oh, we got some more. Oh, okay. All of the currencies. Yes. All right, so treasuries did kind of start to make a jump after the news yesterday, but then slowly drifted down during the day. Although I would say that this session was pretty directionless here in the overnight. A little bit of a push to the upside, but then back to where we were. So although the direction is down and definitely the curve is flattening, the treasuries haven't really made another decisive move. And something that I still see out there is kind of the currency intervention by Japan kind of thing going on. So one might think, oh, we should just go short. I'm not entirely sure, and I need to wait for some, a real catalyst for us to take a trade. In the ES, they did end up moving lower on that day. It's not terrible, but I mean, they're below 3,900. 3,900 probably going to be where they're going to battle over today. I mean, I know, I guess they could push to 3,850. We'll see. Oil struggling yesterday, after having some strong up movements and everything. Biden administration, there was said, oh, that whole thing about buying oil at 8, we were just kidding. So maybe somebody told them that it was a dumb idea. Natural gas also coming back. Our best theory on that one is the rail strike is not going to happen. So that's where we're at on that. Gold and silver getting just absolutely pummeled this week. Like, they were looking good, and then it's silver's better, but gold ugly. Copper also struggling, but maybe set for a winning day today. We'll see. Bitcoin getting hammered yesterday along with the rest of the market. And we'll see what happens over the weekend. That's a precarious spot to be over the weekend. And then we've got the dollar, of course. The dollar still looking strong. So the case for currency intervention from China and Japan, I think, are strong. You think that we could have another situation where there's a Plaza Accord sort of a thing? That would be, I've never seen anything like that before, so that would be wild and hard for me to predict, but it would be good experience. So that's kind of where we're at. I think we just kind of watch this market. The treasuries don't look like they're too active at the moment, but there could be well, that's kind of interesting. There could be some spread trades going on in here. I do see some contradicting order flow between the different maturities. Let me blow my nose here. Let's come through Twitter here. See what we got interesting going on Twitter. People arguing about busing migrants. Reuters on UK sales data activity fell by 1.6% from the prior month, worse than the 0.5% median forecast, highlights the risk of an early slip into a recession and shines a brighter light on government efforts to shield households from the worst of cost of living crisis. Uh-oh, what's Michael J. Berry saying? Attacking false narratives is what I do, and it is so easy. Whatever beef you have with the justice system, if you are pointing at private prisons, you are both lazy and wrong. A small investor buying stocks at 3 to 5% free cash flow does not mean the investor is bolstering or backing the business. The investor is mucking around in the well-punished companies and focusing on the financials and catalysts so you get a better deal on your meme stock. Well, I don't really know what he's going on about. Google Ethereum unmerge. What do you think about? Let's do a poll about the merge. Let's do a poll about the merge. ETH merge. Like, dislike. Can I do it like that? Is that okay? You could have different reasons for liking or disliking it. I want to know what is the general overall sentiment about Ethereum merging. Yes, I know. I should provide a don't care option, but I really want, even for you guys that don't like cryptocurrency like myself, I want to know what if you think Ethereum is overall good or overall bad. That does seem like maybe there's a little bit of upside pressure in the treasuries at the moment. Oh, you know what? I don't have my news squawk turned on. If I've had the tab up for a long time and I've been away, when I come back, it will send the siren for late alerts. It's hilarious. It scares me every time. Good morning, Tobias. Man, you've been here you're always here, but you've been a lot more active this week. Did you fare okay in the end? Well, I guess of course you did from that Wednesday, right? Or sorry, I guess it was Tuesday, right? The Hill. Democrats' blood boils over Abbott and DeSantis migrant busing. I don't really find the migrant busing issue that interesting to talk about. I mean, I think y'all know, or if you don't, you can go and read the stories. You'll know what's going on, and there's not really anything all that interesting to talk about, and not market-wise. And I don't know if it really changes the political calculus at all, but it is interesting to see here on Friday that issue seems to be the one taking over. Why is that? That's not what I would have expected. Would not have expected that. Oh, it's because you're working from home. I gotcha. Org has been weird this week because, like, I on some level, I look back and I'm like, it's been kind of a little bit more relaxed this week. Hasn't been, but then I go and look, and I actually end up doing like way more this week than last week. I think it's because this week the things that I was working on were more disruptors. So but I did have, I don't know. I worked out really good this week, and then yesterday I chose not to work out because that something's going on with my stomach, man. I guess it's better today, but like my stomach seems like really acidic, and then I get really gassy, and I think that I probably have like some sort of, you know, salmonella strain going through me or something like that. And yesterday I was feeling super tired, which really makes me think, yeah, I must have some sort of a gut infection coming through, because I'm extra sensitive to that because of my ulcerative colitis. But I did a little bit of cleanup on the indicators. I had already put out new versions, but I didn't do as thorough of a QA pass, so I went through and did that and just kind of updated some descriptions and stuff yesterday. Felt good. I need to make a video about why price action doesn't work, but I don't think I'm ready for that video. So I think I'll spend the weekend working on that instead of making a video. But not just right. I mean, I need to write up like the whole video, but like I think we need to have a little bit of back and forth on TikTok and stuff with people to see what kind of message. So like yesterday, somebody said, well, I disagree because the price action, you can, with the order flow, you can see the trap traders and everything. But like, I'm thinking through that and I'm like, well, like trap traders can be a thing. It seems to me that the situations when that happens are not as common. And when that situation happens, you're going to see it in the order flow and the price action doesn't really tell you anything, right? But even if I were to say, oh yeah, you can see it in the price action, again, you run into this problem that it's not predictive. Like, you can come in and you can see a situation in the market. It's not predictive, because what matters is the next set of orders, and the current situation doesn't guarantee what the next set of orders are with enough certainty to give you a positive expectancy on a trade. Like, yeah, trap traders are a thing. That's why like the market makers account for it and how they do their market making. Like, the market ends up being statistically efficient in the end anyways. Price action, I don't agree. I think that the whole idea of price action is just marketing nonsense. Is ultimately what it comes down to. So marketing, I mean, there might be some insights in there here and there, but overall I think it's a waste of your time. And I've read a lot of like price action systems and things like that. Okay, interesting. So a story from Reuters is coming out, and their analysis, this is an analysis, is that OPEC plus leaders like $100 a barrel oil, although they won't necessarily defend it. It doesn't work at all. Otherwise, why most people lose money? Yeah, well, most people lose money because most people don't have an edge. And I'm just telling you, you can't gain an edge from only looking at the market data. Is that a way to say it? I don't know. Market is statistically efficient. So if all you're looking at is the statistical stuff, hard to develop an edge as a retail trader, at least. If you're an institution, there are other things that you could do to overcome that, right? Like being fast and being able to put on a lot of risk and so forth. I don't know. The other issue is that though, if you're going to say, so here's the place where I really have a big problem with it. All technical indicators will heavily fail in the current environment. Yeah, well, like we are in an environment where those things are like likely to be doing poor, right? Like the really big issue that I have with it is like there's no empirical backing to it at all. Like they'll say, oh, so this is where my frustration from price action derives from, is I'll be like, okay, you guys believe in price action. I think that it's unlikely because again, the market is statistically efficient. So there's no way, based on what we know about the markets, it would be a contradiction of everything that we know about the markets if a simple statistical strategy that happens to be the most popular statistical strategy out there is reliably profitable, right? So what is the evidence that you have that it works, right? Well, they don't have any data. Of course not. So we can make the data, right? I can program things and I can test it, and I'm good with the data science. So let's make it, right? Okay, so give me your price action trading system and we'll look at it and we'll see what it tests. And like when you read through it, it's like none of it is testable. Like none of it is an actual like solid testable hypothesis about something. It's like a bunch of general ideas that it seems like are intentionally crafted in a way that they can't be tested so that you can't dispute it. And the few setups now, the retail traders, they come up, they say this is what it's, like if you have a double bottom, then it should bounce off of it, and especially if it's near my my support and resistance or whatever, right? And you go and you test those I have tested, and yeah, it's just noise. And in fact, the areas that these people seem to point out, I detect more noise in my backtest results than the order flow ones that I do. Well, not just the regular price ones that I do. Like the ones that I do with order flow are actually, the thing that's interesting about the order flow ones is that the market seems to go in cycles. Like there are some situations where it seems to work really well, and then there's some markets it'll go like a couple months where it works really well, and then a couple months where it doesn't work well at all. And maybe there's a hidden Markov system in there that could help with that one, but the price action ones is just like, it's random. Like the only reason that I think that the people are pulling profits out of it is because they have a stop that's much larger than their target. The market is statistically efficient. That's the thing. The nature of market efficiency is really, really interesting, because the markets, from the perspective of, if I go in and I do a mathematical analysis of the market, you will always come out to something that looks like a market walk, almost always. And there are some properties that are different from a market walk, but you'll come in and you'll find that they don't reliably predict which way it's going to go, right? But market efficiency from an informational standpoint, which is to say, the theory that the current market price is fully reflective of all available information, is almost certainly false. And we've done a lot of research to understand about the market microstructure to see why that is, and what we've found is that the markets react very strongly to volume. Orders have a very strong impact on price, much stronger impact than we would expect. And so if somebody comes in and does a rebalancing, okay, there's no informational content in that, but it will move markets. If the market was perfectly informationally efficient, then after they are done executing their order, the market should go back to the fundamental price, the price that would be dictated by all available information. And that's not the case, right? So for the very same reason that markets are not informationally efficient, it's that same mechanism that causes markets to be very statistically efficient. So if you come in and you see an inefficiency in a statistical inefficiency, a technical inefficiency, let's say, it doesn't take very many orders for you to completely arbitrage that out of the market. And so it doesn't last for very long, right? So when everybody's taking advantage of these supposed statistical inefficiencies in the market, eventually it just gets to the point where it's basically indiscernible from noise. Yeah. You need to understand the volume profile. I mean, volume profile can be useful to some extent, but here again, like, the market's very statistically efficient. So everybody has this, there's a lot of popular ideas out there about like where we are compared to the previous day's point of control, and if we're on the edge of a volume profile sort of a thing, and then you take a trade this way. Nope. I agree that well-known statistically, yeah. Now that doesn't mean that there couldn't be an undiscovered statistical inefficiency. Okay. But number one, it's going to be really, really hard to find. Number two, there's only going to be so much that you'll be able to pull out of it. Right? So it really kind of turns into like, yeah, statistical inefficiencies exist, but like they're not worth pursuing. Obscured and not well known and provide edge. Well, so first of all, if we say obscure, like you're not going to find anything about it on the internet, right? Like somebody's going to have to take you aside and teach it to you, or you're going to have to discover it on your own, right? And if somebody's teaching it to you, then and how many other people are teaching it to you, and like, is it really actually still going to be around? It's probably not, right? So it's not that it's impossible for a statistical inefficiency to exist. It's just that the market is so statistically efficient that it's probably not worth pursuing, right? But that's all we know about the markets, right? So with that, how could the most popular you believe that they're discoverable? Like the thing is that okay, so I spent a long time here on this stream looking for those and searching for those together, right? And doing back testing and so forth, right? And what I started to find was that the amount of information that I needed to prove that there was a real market inefficiency in there was such a high bar. Was such a high bar that as a retail trader, I usually didn't have reliable enough information to be able to determine that. It's like, in order to do this, I would need the uncorrelated order flow data with every level 2 change that gets sent to you over the course of like 5 years to do like a real proper back. We don't have that data, right? But you know, like, that's order flow. If I want to do it just off of price, heck, I can go back as far as I want, and I know that the price is going to be really reliable, right? And I have done every single, like, I've taken all sorts of crazy indicators, and I've definitely found some advanced indicators that, in particular, the John Euler stuff, or Ehlers, or I don't know how his name is pronounced. I think it's Euler, but it was better, but it still wasn't enough to bring you reliable profits, right? So I'm just saying, I don't know everything, but I'm pretty damn smart. I'm a really good programmer, and I understand markets really much better than your average retail trader. And I never found a statistical inefficiency that I felt was reliable. And I basically got to the point where I realized that it really wasn't worth pursuing. I found it was like I can spend years looking for a statistical inefficiency and then find it, only for that inefficiency to disappear 6 months later. Or I can just ignore all that and focus on the informational inefficiencies that are abundant and in your face all the time. Right? Like what is actually a better use of your time? The robots are really good at the statistical inefficiency, right? So let them do that. Because the institutions, they don't have a lot of people right now that are focused on the informational inefficiency. The banks don't do that anymore. They don't have prop desks at the banks, right? The banks don't I'm worried that we're getting to a point where there aren't people at the banks that understand that stuff anymore. Some of the hedge funds understand that stuff, but I think that the hedge funds at this point rely more on proprietary order flows more than anything. So these people that understand the economy and can reliably predict which way the order flow is going to go based on like breaking news and other predictors of order flow, there's not as many people that know that sort of stuff, which is crazy, because it's like, you know, if we're like looking for fruit, right? Like this fruit is just laying around on the floor, and everybody is trying to climb to the top of the tree. You know? Should we like discourage people from exploring that? No. What I would say is that you should seek to understand the market as it is, for the purpose of understanding the market as it is. And but I don't think that you should look for holy grails, right? Like understanding how the market is incredibly useful still. It will change your view and how you look, you know, what you look for. Just stop looking for signals. But there's another point to that, and that is like there is a very intentional and scientific process that you're gonna have to go through in order to find a statistical inefficiency. Like most retail traders that come in and they think, okay, well, here's an idea that I have that I think I've discovered by putting a bunch of indicators on a chart, and I will trade off of that for a month and we'll see how it goes. And then that month they were successful, and like that means it works. It's not enough. It's not enough. Like you need tens of thousands of data points and stuff. So like, unless you're a programmer and you're going to learn all the data science, I have like a series about developing, you know, machine learning. Well, not machine learning, but developing robot trading in NinjaTrader 8. If that doesn't like excite you and interest you, then give up on technical analysis, because you don't stand a chance otherwise. When I started trading 3 years ago, I was looking into the Weiss wave and order volume first. It looks very nice on paper and books, but doesn't work in real markets. Well, you know what I find interesting, Tobias, is that I don't think that the things that people teach from technical analysis are complete nonsense. Well, no, let's not say that, because I think that price action is complete nonsense. What's the way that I should put this? It's not that there's not anything to what they're saying. It's just that it doesn't end up being predictive, right? So what's happening is there are patterns in the market that you're going to see over and over again, because certain actions have very predictable impacts on the market. Okay, if you come in and you were to buy 50,000 ES contracts, or sorry, 50,000 ZN contracts, that would have an effect on the market that is very predictable and has a certain pattern. And there is an optimal way of executing that will result in a very reliable pattern. Every time that you do it, you'll look at the chart and it'll look like that. Okay. The problem is that it's already happened, right? There's nothing that says, okay, when you see this pattern, it means that then this is going to happen. It doesn't work like that. It's like there's noise, then there's the thing that they did, and then it's noise again, right? And so by the time that you can clearly identify that it was them doing something, it's already done. You've already missed it, right? And if you know it's coming, then you can come in and you can say, okay, does this match up with the pattern that I'm supposed to see? So see, the pattern ends up being useful, but the pattern's not predictive, right? Most experts are good because they have risk management and not because they have their technical analysis pattern works. Okay, so well, I don't know if I want to go into that thought that I just had. Good morning, Octavius. How are you doing? I am going to go into this. The reason that there is such a strong emphasis on risk management in retail trading is because the vast majority of traders are doing noise trading strategies, and the only way that you actually make any money, even if it's just short-term money with a noise trading strategy, is by messing around with risk, essentially, right? You take on excessive risk for a short period of time, and then you bank those profits and use that to give yourself more price risk, essentially. You're messing around with risk, and that's why there's such a focus on it, right? Yeah, and lose it all. So why you'll get these people, they'll do really well and then they blow up, right? So for me, I view risk management very differently now, don't I? To me, I want to be predicting the future orders. I should have something that is short-term predictive of the future orders, which means I take the trade, it should start moving my direction, right? I'm willing to let it range a little bit before the move, like it happened yesterday, right? Kind of sat there for a long time before going. Okay, I'm willing to sit through that, but I should not get a strong move the opposite direction, right? So I can determine that I'm wrong very, very quickly. I can determine that it's not the move that I want very, very quickly. And that's basically my approach to risk management, right? So it's a completely different thing. And I guess there's this thing of like, how certain are you, or how predictive is the thing that you have, and what can the market actually handle, right? Based on the volatility, would I be able to exit easily and so forth, right? My approach to risk management is very, very different. So basically what it comes down to is that I'm not convinced that risk management is as large or as important of a component as retail traders make it out to be. It's just, you have to have a spot where you know you're wrong, and you have to, be able to produce stats that give you a positive expectancy, and that's like basically the gist of it. And understand that you can make money from taking on risk, but that there's a fat tail to it. You do that, you taking on risk, then there's going to be a period where it comes in and it just destroys you. I guess the other thing, have you noticed that when the market gets really volatile, I'm a lot more hands off, right? Starts doing crazy stuff and I'm like, okay. Like if I'm in before the crazy stuff happens, then great. But if I'm not in before the crazy stuff happens, I don't try trading it. I guess that's risk management, right? But it's not like a mathematical statistical thing. Because everything that I've looked at with the mathematical statistical thing says that it doesn't matter how you do it and how you size your contracts and where your stop and your target are and everything. In the end, when you account for fat tails, it's going to be your expectancy is going to be neutral. Well, when I first stepped in here, it looked like there was some upside pressure. The treasuries have moved down pretty strongly. I am not seeing incredibly strong order flow behind this move, but I am seeing some strong movement to the downside in the Japanese yen. So this looks like a move in the currencies to me. S&P 500 not looking so hot either, by the way. Have you considered creating a hardcore order manager acting like a long straddle on the volatility times? You know, I've done a bunch of different things, but the issue with the volatility is just that your ability to predict what the next set of orders is going to be in like the next 5 minutes is basically diminished. It's really a frustrating thing. So if markets are moving down, okay, and everybody knows it, the way that the market makers have to account for that is by allowing for more volatility, essentially. Pull their orders and increase their spreads, right? Which means that to trade it, you have to take on more risk. So you may end up in a spot where you have an extremely, extremely good chance of predicting the order flow over the course of the next week or the next month, for instance, but not the next 5 minutes, right? So yeah, you'll be able to, you can go short, and if you can swing it and if you can hold it, then great. But how far are you willing to let it go against you before that happens, right? And what ends up happening is you just get chopped up, right? So really, it just comes back to, you got to know what's going to happen before it happens. is really what it comes down to, right? See, some people, they think that technical analysis and risk management means, well, I need to use my technical analysis to say, I'm really, really close to this area where, you know, it shouldn't go through. So I'm going to put my stop there, and then I have a asymmetric risk to the upside, and that sort of doesn't work, because there's no price movement or pattern that gives you a situation like that, essentially. We think that happens, but it doesn't. If you have a price that matters, the price action around that price tends to be more random. Yeah, was it a full point? Oh, geez, you're right. How is that possible that was a full point on ZB? Well, but do you see what's happening is we had some really excessive steepening. I suppose seeing ZB move down and the others not is a net good thing, right? In net, it's a good thing, because what we would like to see is interest rates be higher for longer, right? We want to get out of the interest rates are like zero regime and get back to when interest rates are average for a decade. That would be better for the market. Kids come back this morning, forget stuff. Did we not put the dog away? Hold on. I don't know. So Octavius, when I come and I look at my chart, okay, I come over here. Good morning, D. I come and I look at it. Okay, yeah, didn't really move in the 10-year. And when I look at my ZV, it's like, well, okay, yeah, the ZV moved a little bit more. It's not until I look at the numbers that I'm like, oh, it did move a full point. I've never seen that before. That is really bizarre. Let's see what we got going on here. It could just be a really big profit taking, right? You feel there's more pain ahead in the indices? So riddle me this. Here's the thing that I don't understand. Is anybody bullish right now? Like, seriously, is anybody bullish right now? I can't think of a single. Morgan K is bullish. Okay, good deal. Morgan K is bullish. I've never seen market sentiment so low. And if you were to ask, actually, let's do it. What was our poll on Ethereum? Well, 12 votes. You guys mostly like it. I think that's good enough on the Ethereum thing. Okay. Recession 2023? Yes, no. Ask your community. Okay. I'm gonna bet that it's like, well, we'll see. I don't want to say what because that would like influence you. But you all know what I'm saying, right? That like everybody thinks there's going to be a recession in 2023. Everybody thinks there's going to be a recession in 2023. How can everybody think there's going to be a recession in 2023 and the market not be selling off harder? I mean, like once Tuesday, Wednesday, whatever day it was Tuesday, was a big down day. Yeah, for sure. But like, how can we not already be at 3,400? You know? Like, if we're going to have a recession, let's just go and get to the bottom already, you know? Like, shouldn't the move right now be I just sell my whole stock portfolio? I don't want to do that because I know that like as soon as I sell my whole stock portfolio, then it's going to turn back up. And I do know that there are some positive flows coming, right? Because next week, the stock buyback blackout period ends. Quad witching boo. Yeah, so somebody in Discord asked if it was rollover. That can't be rollover in the treasuries, but it could have something to do with options. Do you trade Bitcoin? No, I don't. You don't really get an edge in Bitcoin, a speculative edge in Bitcoin, because what Bitcoin does is largely driven by what these large whales do. And as far as I can tell, these large whales, there's no rhyme or reason to what they do. There's a correlation where you could go risk on, risk off and get into Bitcoin, I guess, but then all of a sudden you get these, like what's going on now, you get these big drops on you and come out of nowhere. So I think that if you want to day trade, Bitcoin's probably not the place. What are you asking, TLA trader? GS ? Silver ? Compared to last week, there are more bulls. Okay. So right now, we have 7 votes, and all 7 of you said yes, there will be a recession in 2023. Like, if we're that confident that there's going to be a recession in 2023, why are any of you holding stocks? If there's going to be a recession in 2023, why should any of us be holding stocks? Aren't we in a recession? Technically, no, actually. And not just because there's this board that determines it after the fact and they haven't called it one yet. It's not just that. The time period that they look at as a quarter doesn't quite line up with the negative GDP that we've had. You sold yours 2 weeks ago. Well, good job. Well, actually 2 weeks. Oh yeah, okay, 2 weeks ago was probably a fine. Like, if you sold mid-August, then good for you. I hold because I haven't been averaging up in this BS market. Yeah, I mean, that's kind of been my take on it, is like, well, so I do have some stocks that are down because they were like, I have small cap stocks, right? But it's okay, because I was hedged from other things, right? Now that those hedges are kind of off for me now, it's like, well, I have some money so I can buy more. But if we're going into a recession 2023, why would I buy more? Why don't I just sell the whole portfolio? Well, I don't sell the whole portfolio because what I know suggests to me that trying to make a call like that, I'm very unlikely to be able to make a call like that. And yet I've had times where I've said, you know, why aren't you taking profits right now? And then just watch it come down, you know? It's like you can't predict tops and bottoms, but sometimes it sure feels like you can. So like, you can't call bottoms? Well, I think I can call that we're not at a bottom yet. Am I wrong? And that's the issue that I have, is that everything that I'm seeing starts to point more and more negatively in the long run. Maybe not for the next few weeks. Like I said, next week is going to be weird. I think that what you're going to see next week is some initial selling that's really strong, and then like a really strong pullback that takes people by surprise. That's what I think you can see next week. I think that I know but everything that I know tells me that I shouldn't be able to predict that very well. I shouldn't be able to predict that very well, and yet everything is saying that we're going to go lower, right? And that just doesn't make sense to me. How can everybody think that we're going to go lower and we not be lower? Nice mic, thank you. You know what? This mic is terrible for streaming. You probably never see somebody else using this particular mic for streaming because it just doesn't work for it very well. But I was able to jerry-rig something together. Did you see what happened with Goldman? What happened with Goldman? Are you talking about that they started doing the regular underperformer culling again? Or are you talking about that they have a consumer credit problem? That even though they're like been marketing towards like the high-end consumer credit, that if there's like a really big collapse in consumer credit, they're going to get hit harder. Apple Pay does. Okay, let's see. There might be something more. News. Uh-oh, turmoil among flashy Goldman execs and DJ CEO is already getting nasty. I could see that one. So something that's unique about Goldman right now is that the CEO came from the technology side. That's not to say that he doesn't understand the investment banking, because he kind of, he kind of got transitioned over into that area, but in the end, he's a techie. And so if Goldman is having problems, I would very much see all of the partners being, see, he just doesn't understand the business. Why do we have him in charge? Right? Aesthetically great mic. Yeah, it is good. You know what though? This mic is like so old. So that's the thing that's crazy about it, is that it looks like cool and futuristic and everything. But the reality is that this is a mic that's been around since like 1950. And if you like go on TV and somebody has like a stage mic, it's usually this mic because it looks good. It does have a good sound to it too. And I don't know if I like it better than if I had like an SM7B, but it's what I have, and it's good and it looks good, and I'll probably keep it. I think at some point I need to upgrade my sound card so I can get a lower noise floor and it would sound a little bit more warm. But other than that. Okay, so I just want to note that there was a relatively large iceberg at 15. So there wasn't very good liquidity all through this area, but I think that was because of currency correlation. Now the treasuries have gotten to a point where they want to trade, so let's watch it. Okay, yeah, no, what you're talking about is what I was saying. They issued subprime credit cards and the default rate is high. Yep, I did see that. Have they been getting hammered really hard? Let's come to TradingView and look. That was a piece of news that I found very discouraging, because one of the what we say, like, stories in Goldman is that they're diversifying their revenue and they're setting up to make money from consumer banking, right? And that business should grow and provide growth for them. But well, it looks to me like this, in September at least, that they've been treading water. So I don't know. Okay, do you pay much attention to the 10 a.m. Forex CME options daily expert? No. That's not the first time that I've heard about it. But like last time that I heard about it, people weren't able to provide me much details. There were just that there was an FX expiration of some sort. Now you're telling me it's at 10 a.m. and that it is the CME options. That might give me more information to go and research about it. Although I don't think I can recall ever seeing that time as being a critical time for Forex. I have to look at that. Okay, now Tobias asked, what do you think about the FedEx news? That is concerning too, right? Like that just brings us back to, how can the market not be lower? How can the market not be lower? Well, I don't know. Market's not informationally efficient, I guess. Because you see something like that from FedEx, and shouldn't that be like, oh yeah, we're going into a recession, sell, sell, sell. Probably will be. They're just waiting for the options expiration, and then we can actually go to where we need to be. Is that what it is? Where are we at on the poll now? How many of you voted now? 10? Well, okay. You can get more than 10. We get to like 20 or 30 votes. Hey, by the way, if you haven't clicked the like button, make sure you click the like button. Because clicking that like button early, especially before the ES open, Really helps the stream out. And then they show you the levels. Well, I should probably... Well, I did reset, but I'm going to redo it. Oh, you sent me a picture on Discord. Oh, that's not what I expected to see at all. Let me open this over here. And they show you how much is set to expire. And there's a lot set to expire yesterday. But not in the Japanese yen. It's a lot more in the Japanese yen today. Interestingly enough, though, the Japanese yen has... I'd say it's pulled back a little bit, but the treasuries have not pulled back as much. So maybe they'll come though. Maybe they'll come along eventually. It is to be honest with you, it's kind of messing with my head a little bit, because I'm sitting here like, what? Why should I not sell my whole portfolio today? Because it could get ugly next week, you know? And especially if like we go into a recession and like, you know, that hurts Goldman, that would hurt my portfolio big time. Okay, let's read this article from page 6. This was on September 14th, so 2 days ago. Talk about passing the buck with Goldman Sachs in something of a pinch. No, this is not okay. So the words "something of a pinch" is a link, and the link goes to a story about Goldman preparing layoffs across all departments as soon as next week. The thing with that one is that Goldman Sachs will once a year fire like the bottom 1% of people or whatever, and it's just that they weren't doing that during the pandemic and they're picking it back up again, which means that they're just normalizing after the pandemic. So that story is probably a nothing burger and doesn't necessarily point to larger problems at Goldman. Like if Goldman was really trimming down, they would be doing more than just that regular culling. I asked you last week if you would ever sell and you said never. That's exactly the problem, Octavius, is that the decision that I made was I don't sell that portfolio. And everything that I see is saying that it would be better for me if I did it. I'm not going to. I'm not going to understand. I'm not going to. But at the moment, it seems to me like it should. But like, it also kind of is this big check. It's like everything that we're seeing seems to be saying we should be selling right now, but we're not. And the market's not selling off super hard. We're not at 3,400 yet. How are we not at 3,400 yet? If we know after seeing that CPI report, it should be like recession guaranteed, right? But the market's kind of like, well, I mean, you know, that should be a check to say, oh, well, really our ability to predict this thing really isn't very good. Probably we shouldn't be that sure of it. Doesn't mean that it's not going to happen, just that maybe we shouldn't be so certain, right? And to further that point, everybody being so short and the sentiment being so negative provides good opportunities for short squeezes. If we're in ES, we should probably continue to look for short squeezes, right? like we had recently in August. Don't sell it. I will not sell it, so you can make fun of me. Especially if like Goldman comes all the way back down to like 200 or something, then you can really make fun of me. Because then I will really be unhappy. Then that'll be like more than a 50% drawdown on my portfolio. Like the squeeze we're going to get today. You think that they're going to squeeze higher today? I don't know. Like well, let's see what happens when they open. Because there is a chance that they try and fill the gap off of the open, right? Yes, it looks like a head and shoulders under that 3,900 even. Oh, are you talking about like on a daily chart? I mean, I am more interested on a daily chart. Nah, I wouldn't really call it a head and shoulders per se. Here's the thing. If we were like in a regular market, like what I've seen in the last decade and a quarter or so that I've traded or that I've been watching markets, when you have a down move, it'll get like this and it'll just be like, it'll really go down. Like it'll go to maybe the 20%. And then it'll just be like these really big candle days. Okay. It'll just be like a huge cluster of them. Okay. Like this day, like this one right here. What you would get is like 5 of those in a row, like a whole week of just those. And then that would be the bottom. And maybe it kind of goes sideways for a while and bottom tests a bit, but then eventually everybody chills out and it goes back up. That's what it's been doing. This is not the same thing. This is like you'll get a big panic and then they kind of chill out. And then you get a big panic again and they kind of chill out for a month. And then big panic there, and there, right? Like it's just individual days that end up being the worst of it, but it's not like full on panic, right? It's a little bit more orderly. And that concerns me because it's when things get a little bit more orderly like that I think you get in trouble, right? So the more when, in other words, like really impulsive downside movement and high volatility leads to reversal. But we're not getting that. We're getting slow and persistent selling, which tends to have more life to it. What are you saying, Marty? Y'all will miss Trump? There are still some bulls left. Apparently, that's why we're not at 3,400. But honestly, there are no signs of panic or capitulation, right? So we're not there yet. Yeah, there's no signs of capitulation. That's true. Yes, you're right. Controlled self, no panic selling. Well, so here's one theory, is that there really aren't bulls, or at least there aren't very many of them, but that it's other things that are keeping us up. It's like, index funds and short covering and yada, 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 causing us to have a little bit more control to the downside movement. The reason that's important is because, again, the stock buyback window opens back up next week. So does that support the equity indexes? We'll see. Right? If next week ends up being a positive week, we're definitely got to look at that and be like, okay. And if next week ends up being a negative week, then we should be like, see, Sept, you should have sold your Goldman stock. I don't know. The chart in Goldman is really interesting, though, isn't it? Because there's like been a lot of negative stories out about Goldman, but the stock doesn't seem to be reacting to it at all. I think it's because the insiders know that these stories kind of don't matter. Like they're not really doing. That's not like cost cutting. That's just returning back to normal for them. The consumer credit thing, that could be a problem at some point, but it seems like the market thinks not yet. Looking at my face here, I feel like that. I don't know. You see my face? It looks a little bit more reddish pink to me, don't you think? Maybe that's me being a little sick. It's when you have a problem with your gut, it's kind of stealthy because you might not feel bad in that moment. You don't feel sick, but like over time, your energy levels do decline, and you might not realize that anything is wrong. I don't think that I have C. diff, but I think that I might have some sort of, I don't know. I don't know if we ate something or what, but like I think it's been going around. Weird break in the subject. Sorry, but I just cannot get it. Do I look extra pink to you today? The color just doesn't look quite right to me. I'm looking at it. I'm like, well, it's like my. Do I have the right picture mode on? Do I? I don't have the frame rate to what I'd like. I'd like it to be there, but then that's too dark. And then I would have to like turn the light up. Right? Turn the light up, and now we're good. No, that's no good. That's not good at all. Do it at 30, 5500 Kelvin. You think that this with it darker like this is better? Not bad. It should be a little bit brighter though. This is what you're seeing is actually probably a better reflection of what the room actually looks like, because it is. I do have the lights turned down quite a bit. It actually says, the meter says that it's 0.3. The meter says that it's okay like this. I guess I'll leave it like this. You still expect, oh well, we are, let's see here. I need to get something that makes a ding when the S&P 500 starts, because I don't ever hear it. Ooh, that's what I should do. I should build a sound into my my line so that when it draws my line, you want to write that? Let's write that right now. Wait, no, we have to go and find a bell first. Royalty free sound effects. I forget the name of the website that we use. Free sound. There we go. Okay. Stock bell. Let's see if what that gives us. Nicey bell. Oh man, it's like a 15-second long thing of the nicey bell. You probably didn't hear that, huh? Is the nicey bell different? Oh, here, I'll turn it off. I hope that didn't like blow your ears off. No, we got an indicator. We got it. We got this. What does the NASDAQ bell sound like? NASDAQ bell? Where do I have a sound? Where can I hear a sound? Here's a video. Marty thinks it's the same. I'm guessing it's the same. But surely the opening bell is different from the closing bell, right? I don't think that the opening bell goes on for 15 seconds and everything. Okay, this pullback in the treasuries is pretty decent, and the 30-year definitely coming back. It is different. It is different. Because the NASDAQ, they have like music and it sounds more like a cowbell. Nicey bell wave. Oh, is there one on story blocks? Opening bell sound effect. Sound snap. That's sound snap. What the hell? Story blocks says like, oh, okay, I have results for that. Nicey opening, closing bell sound, but then none of the results that it's showing me are actually the opening and closing bell from the Nicey. No. Oh, I could just do my flight attendant sound. That's a good sound. I like it. Ringtones. It's funny that when I search for that, I get more ringtones than anything else. Nope. Jeez, that one was loud. This guy has a bunch of floor trading sounds, but Listen to NASDAQ's new market opening bell designed by Sonos, and that was in 2018. Do the bye. I think if I use that might get the oh, let's see here. See, so like they got this music. Warmer bell with music. Yeah, their ding sounds more like a cowbell at the NASDAQ. Apparently Sonos redesigned it. See, what I'm worried about is you play that sound and then it gets flagged by YouTube as like being a protected sound or something like that, right? So like if I did the full NASDAQ song and everything, I bet you that would probably give me a strike. Well, not a strike, but it would get the stream. It would get tagged. Okay. What was the one that I had that did the sound? Oh yeah, it's in Alice. So hold on a second. Okay. Indicators. Speculators at 3. Then line at time. Okay, and we're going to need to add oh, it's not Alice, it's hold prices. There we go. Pull over hour, minute, line color, line style, line width, and then bell. Public string, bell. Bell location. I hope this one would be at the bottom of the list. Bell location. Okay, cool. And then let's see here. Do I have to load? Yeah, do it in data loaded. Data loaded. Rising file name. But this will be Bell. Oh, why is it that? That's wrong. That's wrong. That's completely wrong. What are you typically looking for to take a trade? Well, you asked a good question, a solid question, and you're new and you want to trade treasuries, so I got to stop here. So when I'm looking at the order flow, I'm much more interested in what the current market conditions are for order flow rather than trying to look at order flow for trade. The market is very statistically efficient. So what you're going to see from the market generated information is not going to be very good at predicting what's going to happen next, but it will tell you, like, if a thing does happen, here's how it's likely to play out. So like right now, what I'm seeing in the treasury market is that they've moved quite a long range, especially in the 30-year, without trading really a whole lot of volume. It looks to me like the market is being driven by currency correlations more than anything right now. And with the amount that we've come back, there appears to be kind of less latent liquidity around 114.17, and so we're kind of rotating around that. Okay, but what am I looking for to take a trade? I need to know something that has a high probability of predicting the future orders, right? So for instance, if a piece of news came out that said that Japan is fed up with this and they are going to do currency intervention to prop up the Japanese yen, okay, the treasuries are going to rise with that, and so I would be buying the treasuries here, right? But it could also be something like today is a quad witching, and because of where the options are sitting, we're likely to resolve at 115 in the 10-year. I'm not saying that that's the case, I don't have, unfortunately, this time around, there's not enough of a aberration in the options for me to make a call like that. But that could be something that could help me predict the future order flow, right? So those are the sorts of things that I'm looking for. And then, you know, I want to see the order flow correlated with that, right? So I want to see that the order flow conditions are correct. So right now, if I wanted to take a long, yeah, that's all way above my head. Don't worry, it's not as complicated as you think. What's going to happen is a year from now, you're going to think back on when I told you all this, and you're going to be like, oh, it's really simple. The reason why it felt like it was so above my head is because I thought that things was something completely different, right? So let's try and game one out for right now, okay? Let's say that we thought that there was going to be a long, that we wanted to go long in the treasuries right now. Because of something with options expiration, or because we thought that more job owning from the Japanese yen was coming. Okay. We know that the current liquidity conditions are that the liquidity from about 15 to 19 is a little bit weak. So we're at the bottom end of this range. So that's good. The position that we get, relatively speaking, that's good. Also, it's been about, like, the last time that we had a move, like a significant move, was about 6:30. So it's been way more than 45 minutes since that's happened, right? It's been an hour and 15 minutes. So the timing for a trade would be appropriate. So we could come in and take a buy. And then the last thing that I'm looking for is if I can manage it, I want to try and get an optimal entry. Like if I'm gonna buy here, I would much rather see an iceberg at 15 and buy at 15. Or if I see, so no, not that time, no iceberg, right? I would rather get filled on an iceberg. Or if I think that the momentum is coming in, I want to hit into 15 just as it ticks up. Just as it ticks up. So I hit it and then it ticks up. So I'm long 15 and the best bid is 15. That would be optimal, right? So that's basically the way that I think about it. So I want to see liquidity conditions, currency correlations, and the timing of things kind of all in line with each other with my fundamental, or what I would call a predictor of order flow. And then that's when I take a trade. You know? Use that gamma level by Discord. Oh, for what it is in the treasury. I don't know what I can gather from that information, unfortunately. It looks like there was some decrease in puts, which doesn't necessarily help us, does it? Means that the options might not provide us a trade, right? Thanks for breaking that down for me. Yeah. So here's another way of thinking about it, Chris. The market is very statistically efficient, but it isn't very informationally efficient. Okay. So if you go and you do a statistical analysis of the price and the volume and all of those sorts of things, it's very, very, very difficult to find something that will accurately predict where price is going to move next. But if you were to look at price compared to what should price be fundamentally, if you factor in all available information, is the current price reflective of all available information? It is not. So if I can find a situation where there's a piece of information that isn't correctly priced into the market, right? And I have some sort of a catalyst, like I have some reason to believe that the market is going to start pricing that thing in, and I can get ahead of it. That's when I want to take a trade. So I'm trying to trade off of informational inefficiency. Another way of saying this is I'm a speculator, right? I'm trying to predict what other people are going to do before they do it, right? As opposed to a market maker or a noise trader that is just making money off of the spread or making money from taking on risk, right? Anyways, back to our file here. So why? Need to look at this for a second. Ninja Trader location. Is there a better... oh, well, I should pull out... Let's see here. Where is it? Play sound. Talking about noise trading, look at ES today. It's been a mess since the open, right? It kind of looks like they're going to have a little bit of a push further, but that kind of action kind of suggests that they might not be able to make it very far. Let's see, what does the liquidity look like when they're hitting into it? Well, the order flow coming in short, the market orders coming in short isn't very extreme or strong, is it? How do people scalp ES with candles beats me? I don't think they do. I mean, they try. They try. And what they do is, what most people do is they say, this must be, it's bounced here more than once. That must be resistance, and this must be support. And then they say, okay, it came back to support. What does the candle look like it's doing at this moment? Okay, it looks like that it is going to be support again. And then they trade it across. That's what they try and do. And then their stop is just really, really far. Okay, so it is a play sound. Here it is. I don't know why I had like my full directory path in there. Oh, okay, yeah, do it like this. Bell, and then it plays. Save. Compile. Chris says that's basically what I do, lol. Well. Shibuya's candles are also completely useless in my opinion. All this entry candle, confirmation candle. Yeah. Well, like I said, almost everything that you come at from that people share from technical analysis, they're not pulling it from nowhere. It's just that usually what they say about it and how the market works is usually complete nonsense. Like their understanding of how the market actually functions is incorrect to begin with. And so everything that they think about what they're seeing from that pattern ends up being wrong too. The pattern is the result, okay? The pattern is the result, not the thing that kicks it off, right? Norden said it best that you can see them buying, they are right, but people assume is going higher and vice versa. The whole thing is what technical analysis people are saying is, if I see a pattern, then when it comes to here, that means I buy here, and it means that it is likely to go here. And that's not true. If you go and you do a statistical analysis of this, you will find that the probability of it going up to here versus the probability of it going down to here is basically random. It might have a fat tail. Might be that it goes this way most of the time, but that when it goes this way, it goes this way really, really hard. But basically, you go and you program up a strategy and you put your stops and targets in and everything else like that, you're going to find that there's not actually as consistent edge if you have enough data, right? But is this pattern a thing? Yeah. It means something. It happens for a reason. This is what happens when somebody's executing a large block order with multiple legs. Is there something that predicts that this is going to happen though? No. By the time you see this, it's already happened. It's too late. So you have to predict that this is going to happen. But that's the thing, is you can say, somebody is going to be buying today because of the Japanese currency intervention. I think that that's a really important flow that we got to kind of keep an eye out for, although I don't think that we've seen it yet. Okay. Japanese yen currency intervention, or maybe something comes over the squawk that somebody just said something about Japanese yen currency intervention, right? And then at that point, then I know that this is how it's going to play out, right? But that's because I know what's going to happen, right? Know what's going to happen. Don't rely on patterns, because the patterns aren't predictive. But like, there are things that are predictive. If Jerome Powell came out and said, we were wrong, we're really concerned about the economy and we're not going to raise interest rates next Wednesday, right? Then the treasuries would buy. The treasuries would buy super hard. That would be the trade of a lifetime if that happened. You know, I'm giving you an extreme example, but you get what I'm saying? I missed one thing here. Just know what's going to happen. Yeah, so I'm interested now that we're seeing it, if the Japanese yen does anything different after this. Okay, so here's what I'm going to do. I'm going to come into this chart and I'm going to say, actually, I'll add another one. So these are my free indicators, line at time. And this one I'm going to make it be 8 o'clock. And the bell location is going to be, what is the name of the sound that I have? I think I have them in the base, yeah. Oh, it's called flight.wave. That's funny. Okay. Let's see if in 1 minute we hear the sound. Oh, I added a sound effect to my line at time indicators so that it will play the bell. If we like it, then maybe we'll modify it so that the bell makes a little bit, maybe it goes off multiple times. Like maybe it goes off 5 times. Oh, you're right. Consumer sentiment at the top of the hour is going to be really important. So let's see. Maybe we get something that's worth trading off of, right? Because there is going to be 1 year, okay, 2.8% for 5-year inflation expectations and 1 year expectations for spot 6, which was in line with the expectation. So that's probably not going to move us. Oh man. And the headline sentiment number was 59.5 versus 60. So it was very close to the estimates. Leaf floating on a lake. I don't know why, but that I find that that's a good name. I like it. Look at, well, but there was news released just then, D. in addition to the options expiring. I'd be more interested in what does the Japanese yen or the dollar do from here. Well, I guess we'll see. You know what though? I don't think that any of those numbers really tell us anything useful. But the market is pushing up. And maybe the move is higher here on the whole thing that I've been saying this whole time, right? Currency intervention. Okay, so you know what? It didn't work. So I gotta come back in here. What happened? Oh my gosh, I've got like this thing on, so I can't. I have to go really far back to see. Okay, so first thing is, oh, I'm gonna need to change that. This right here, the cumulative delta. Do I not have? Well, I need to add that then. Negative number for consumer sentiment. Yeah, if the number was negative, the might have rallied. So Chris is probably listening to us talk about, well, if this happened, we'd probably do this. And he's probably like, wait, what? Isn't that good or bad? Or why would the treasuries do X or Y? But like right now we're in this mode where bad news is good. Like the more negative the economy looks, the more likely the Federal Reserve is to back off of raising interest rates. And that's a net positive for the equity indexes. So if the consumer sentiment had been bad, I wouldn't have been surprising to see the S&P 500 rally, and the treasuries probably too, right? Because up means lower interest rates. I need to change that today. Well, I'm just going to take it off the chart for now. So this indicator, it prints out it's matching. So I need to make that an option. So let's come back to this chart. And let's try it again. Let's try it again. Line at time. What's this one? Oh. Line at time. And make the time be, the start minute be 8:05. Okay. I should see output here. Yeah, that's exactly, Tobias. The 5-year inflation expectation slips to 2.8 from 2.9. That's good, but it's such a tiny amount that I don't think it's enough to matter. Okay, let's see if we get it this time. 10 seconds. Doesn't even print something out, huh? So let's try this. Print. Well, file name. Taking it a while to compile. There we go. Why don't you use Visual Studio? So I've been using Visual Studio Code to code lately, actually, which isn't as good as doing it in Visual Studio, if I'm honest. I should look at that. I've been trying to up my Vim skills, but for NinjaTrader programming, you still kind of want to have that open so that you have the NinjaTrader compile button, because sometimes when it's supposed to like automatically compile when it detects a change in the files, but I find that doesn't always work. Start minute 7. Okay. I wonder, is there a Visual Studio Vim plugin? They have plugins in full Visual Studio now. But for a lot of the stuff that I do at work, Visual Studio Code makes a lot more sense. It's kind of funny because Visual Studio Code is like not really well adapted to the kind of more serious programming that I'm often doing. It's really was designed better for like working on websites and stuff, right? But they've done such a good job with it that like everything is going over to that. Okay. So that's not what we want at all. Yeah, it's not finding the file because it's trying to find it in the NinjaTrader installation directory, not the documents directory. Yeah. Well, not only is, well, the thing that really makes VS Code good is that it's efficient, right? I mean, it's like built on JavaScript kind of stuff, but it's very fast. And then on top of that, it's customizable, and people have made so many plugins for it at this point that it's, here's what's going to happen. So they're going to get rid of Visual Studio. They're going to get rid of Visual Studio and have all of the debugging stuff built into Visual Studio Code and move over to that. That's what's going to happen. If that hasn't already been kind of going on. Okay, so is there another global there, though, that like maybe... Bell file name equals, this is probably only happens when the, oh, okay, I did call it Bell, that's right. Globals dot, okay, so there's an installer, but is there, like a user dir? User data dir. There we go. But it didn't pick up this bit right here, which I'm kind of... I don't know why it would do that. See here? Ah, okay. Okay, well, let's try it. Developed by Yang. I don't recall. But the thing was is that it wasn't so the stuff that I've seen about it from the developers, the thing that they thought was important was that they had made the decision that that was important to them, essentially, which was kind of interesting. 11. It's like they came in and they said we are going to do this in the browser, but it's important to us that the application is as fast as possible. Which is kind of funny, but like that actually is like the most important thing in a text editor. Is like being able to load a really, really huge file really quickly. But I've been going through, maybe I'll have some time to do this today. I want to go and redo my key bindings for Vim. So I've run into a couple of issues with some places, and sometimes it's hard to remember all of them key bindings. And I would much rather them be on my home row fingers. So, but there's another text editor called Helix that I think is better than Vim. Okay, there. So now it's doing that correct. But why is it not adding the file name part? And why is it printing it out every time? If time.hour equals hour and time.minute equals minute, then I print the bell file name. That should only ever happen once. Oh, you know what's happening is it's the other one that's already on there that's making it happen. Okay, that's funny. So hold on a second. Let's do something here. Line at close. Line at time, rather. 8. 14. Light.wave. Okay. Clear. Well, that ZB came all the way back, man. It does look like the Japanese yen is driving it. Gold is soaring. The dollar is getting creamed, and the S&P 500 is doing well. What do you think about that? Should I have traded on my currency intervention thesis? I don't think I had enough information to know that it was going to turn out that way, but it's looking good now, isn't it? Like, that's funny because I don't know if you're still here, Chris, but what do you think about that buy at 16 that we had talked about, right? Because here's the thing. If you had taken it, man, you would have never have gotten a tick against you, and you would have caught the whole thing. Now, there was a little bit of luck about that, but everything had kind of lined up there. It's just that I didn't believe enough in the original thesis to have taken it. That's why I didn't take it live. But did you see how all of the other technical things kind of came in line? You grabbed a Vortex scalp winner program. But I hope that kind of shows how, yeah, the liquidity conditions don't necessarily predict where it's going to go, but it can still help you get a better trade, right? Shouldn't that have gone off? Yeah, it didn't go off. I didn't even get... Oh, now that's really weird. 8, 14. We'll try it at 8:16. I'll try it one more time. I don't know why that would all of a sudden cause it to cease working, but... Oh, you know what? Oh, and that makes it even more weird. I'm not going to get an on-bar close until the close of the 5-minute bars, so that's not going to help. So let's see here. If I do this line at time bit, I go to 7:30. Light that wave. Blah 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 blah. Okay, so it's now printing out the correct time, but that should only ever happen once, and it didn't actually play the name. That was weird. Say calls just went bearish up here. I know there's a possibility that this goes back to 115 even, right? That's where I would expect the options to be like most concentrated. Oh, you know what it is? Yeah. I know what's wrong. Okay. Right here. If state equals state real time, and I play the sound. Otherwise, all right, I print it. Let's do it that way. So let's see here. I think we need to wait, but we might get another chance for it to go higher. We'll see. Okay, so if I clear this now. Cool. Now I'm going to change it. And hopefully I can change it quickly enough. Quickly. Line at time. 8:20. Okay. Okay, phew. I think I got it. Let's see if we get the sound now. And you didn't hear that sound though, did you? You probably didn't hear the sound, did you? So fix that. Close this. And then we gotta come over here to sound and say, where's Ninja Trader, right? Oops. That's funny. Aha. No, not oxen, but why did I do that? Cable input. No. Oh, is it the vial? Oh, right here. There we go. Now when it happens, you should hear it. So now that I've wasted a bunch of time on that, so like the one thing that kind of well, so let me get things set up here a little bit better here. Close a couple of these. So if we come back and look at the chart here, load this up big. So, oh gosh, I hate it when it does that. There we go. So down here was where we were kind of talking about taking along. It wasn't a serious trade though, so I want to take credit for that. But we did have this move up, which was kind of, you know, I want to say unexpected, but maybe driven by currency correlation. Then it went dead, and then we had this news. So the news happened at 8. The news happened here. They didn't move higher until 10 minutes later. Okay. So when I was first looking at this, I thought, well, was that because of that news? I think that that's not the case. I think that they were, whoever was executing this block was waiting for that to be done with first. So that means that we probably could justify taking like shorts up in here. Although you're not getting a very good price. So like I could still justify a market order if I really, really strongly believed in it and I really thought that it was going to go. But the timing and the price aren't particularly great. And the risk that I run of buying in here is that it will come back on me a little bit. But you can see, well, at 4 to 3, that was not bad. There is some volume there though. No, that's very aggressive. I'm a little bit wary about messing with it because it's a Friday too, right? Yeah. Okay, so what I'm seeing right here, make note of this, Chris. You see those, like, there's like 1800s. Oh, did my camera die? That's okay. It looks like my battery was not charged for some reason. Yeah. It's on. It's dead. We'll just keep it off. That's what that sound was earlier. When I heard it, I was like, doo, doo, doo. What? Wait, what's that? Okay, so you see down in here, well, there was this one right here, but through a lot of this, there wasn't like really pushback, and it didn't take very much volume to move it. And you look at some of these moves, they're not on a ton of contracts, all right? Like maybe 5,000 contracts to make that whole move up. So to have seen over 5,000 contracts traded in this area right here kind of suggests that you could get a liquidity hole. So when you see the big players kind of like transacting with each other in a spot like that, you don't really want to participate in that location, right? So that means that if I do want to still buy it, I should wait for it to come back. I should, at the very least, I should be getting 43, if not 44. Right? But it's likely to hang out in that area for a while now because of those big transactions. Let's see. I mean, there is a possibility that they come back to 25, but it's probably more likely that they just form a new range up here. Interesting. Those are all the things you're looking for your interest. Yep. So there's actually an empirical thing that we use to make that determination. So it's the study that you want to look for is about Walrasian auctions. But basically what happens is when a lot of transactions happen in one spot very quickly, that exhausts the liquidity, the latent liquidity at that spot. So what I'm looking for now, you see how there's only like 200 bid at 28 and now it goes offer and there's only about 200 to 300 offered. Ticks up 500. That's a little bit different. That's a little bit better. It looks like there's still some upside pressure coming from the 5-year, so they might be able to keep going, but they did kind of hurt the liquidity there. So that doesn't mean that it can't push forward. It just means that it's going to take them a little bit more volume. Like if the volume continues at the pace that it has been, then it's likely to just settle around this 27.5 area. If for them to push, they're going to need to get more market buying volume. Well, look, they got that 1679. The market makers aren't getting out of the way. Are they getting out? Oh, look, then they kind of fell. So there's kind of the difficulty with that. So another thing I got to keep in mind is that like 2000 isn't like that strong. If there was like a 5,000 black order up in that area, then I definitely would be like, oh, okay, I don't want to touch it, right? But this is definitely turning into like that there's probably more buying coming, right? Now, a problem from my perspective also is if I think that they're going to go to 115, is that going to give me 410 maybe? 3.41? I don't know if that's enough for me to justify a trade anymore. Definitely if I had caught 43, and I would probably be trying to let it run. But there is still this problem here. There is still some volume trading through here. So let's see if the market orders are strong enough to keep pushing. I think also I probably need to be paying more attention to this 5-year because it looks like the 5-year is one of the key drivers here. 5-year and the Japanese yen, of course. Ooh, look at that. Okay, well, so do you see how it's like, okay, there is a tendency for them to want to fall back to 27.5, but is that predictive? No, it's not. Right? We have to know like what are the future orders, and in this instance, the future orders were strong enough to overcome that, right? Yeah, my face is frozen. My face is frozen. I don't know what I did yesterday, but I guess I had the camera on and it didn't. Oh, actually, I know what happened was that I unplugged the camera to plug my phone in and didn't charge the camera back up. That's what happened. I wish that the camera would run just off of the USB, but it doesn't work that way. I should get one of those dummy batteries, but I haven't. I mean, this has been giving us plenty of opportunities to jump on it. I don't see any reason that it would have to stop. It's just, I think I missed my opportunity, and I think that the reward that's left in it is not enough for me to justify taking risk on here at this point. But I wasn't really looking to make a trade today anyways, right? I do think because the Japanese yen is moving here and the dollar is really strongly moving down, I do think that it is the currency intervention theory. But, you know, I did not have enough information before this all happened for me to really have a conviction on that trade and take it. So at the moment, it looks to me like they're a little vulnerable to fall back to 27.5, but the sell orders aren't really coming in. But like, look, it doesn't take very much for them to do it. The liquidity is pulling back through there, so. And that is being accompanied by the Japanese yen falling back. So this is another issue, is that because it looks like that the currencies are what's driving us, the order flow in the 10-year might not be as useful to us in this situation, right? Well, not enough to touch 27.5 yet. Flow may be a little bit more balanced. Oh, what's this? Fed launches investigation into GS Marcus Consumer Banking Unit? That was 1 hour ago from Bloomberg. Regulator is looking into operation of 6-year-old business review ads to pressure on managers to show it is under control. Goldman Sachs Incorporated's 6-year foray into consumer banking, the unit dubbed Marcus, is the focus of a new review at the Federal Reserve. The Fed officials have been looking into the Wall Street giant's online banking platform aimed at retail customers. According to people with knowledge on the matter, for at least several weeks, they've been prepping Goldman management with questions and follow-ups in a process that's still continuing, the people said, asking not to be identified, discussing confidential information. Okay, so far this doesn't sound like they're saying that Goldman necessarily broke a rule or anything, but that there's enough risk in there to warrant concern. The review goes beyond the central bank's regular oversight of the firm and is distinct from its more frequent industry-wide looks at business lines of interest. By zeroing in on Marcus, The central bank is taking stock of a division that's relatively new and growing substantially inside a company without much history dealing with the general public. Yeah. While it's not indicative of any wrongdoing, it is another headache as Chief Executive David Solomon marches ahead with his ambition to expand Goldman, a merchant of high finance in the world of consumers, soaking up deposits, issuing credit cards, and at some point offering checking accounts to the masses. The examination puts yet more pressure on the bank's leaders to showcase their command of the business and tighten controls. The bank has been signaling recently that it's taking a more cautious approach towards Marcus's growth. Behind the scenes, Goldman President John Waldron has assumed a bigger role in overseeing the business in an attempt to bring expenses in line and stanch losses. I'm kind of keeping this 10-year going in the corner of my eye. Maybe I could have gotten 425. I was thinking maybe they'd give us 43 again, but it doesn't look like it. And I don't know if 43 would be a good trade anyways. So I think that it's probably better for me to wait until next week. Though I'm interested to see. Well, look at that. That was actually some more aggressive selling that just come in there. That kind of scares me off of the trade. S&P 500 is doing well. At least it looks like they've recovered the gap from this morning trading. There's still like gap into yesterday's close though. They're about halfway to the gap of yesterday's close. Gotta go. Well, thank you for coming by. I hope it was useful. Should watch my VOD videos. I have a lot of VOD videos, and that's where the really useful information is. Yeah, I don't know. We'll see if they could touch 27.5 again. Cash burn has gotten all the more painful in recent months as pandemic-era surge in Wall Street deals subsides, making Marcus a fraught topic among Goldman managers. Investment bankers and traders bracing for job cuts or lower bonuses are competing with a division that was once supposed to break even in 2022, but has instead eaten up more than $4 billion since inception. That's not including Goldman's acquisition of installment loans provider GreenSky in a deal initially valued at more than $2.2 billion last month at what turned out to be a peak for the market for fintech ventures. Yeah. So, is that affecting them today? Well, they look like they're down in line with the rest of the market. Let's see if I add ES on here. ES. Futures. Same percentage scale. I'll just do a line for the spoos. Okay. So if we come to here from yesterday to here today, it does look like they are down a little bit more than the broader market, actually about 1% more than the broader market. So it is hurting them. Hasn't GS lost money? I don't think that that's accurate. I think that they did really well in FIC in particular last quarter, didn't they? Kind of hard to remember. But like, that's the thing, is like the story in the stock right now is it's consumer banking business. So like the Fed not being happy about how that business is going isn't a good sign, right? It kind of suggests that the bank didn't manage the risks very well. I don't think that what we're seeing here is necessarily a disaster for the bank. but it warrants a little bit of concern. For something that I want to keep for the rest of my life, I think I'm probably okay, but should keep an eye on this. Like, if that really turns into a, oh man. Like here's the thing that's so ironic about this stuff, right? Is that Goldman Sachs really strongly believes in values and teaching values to its employees, and that its values are the source of its success. That's what they believe. And I believe that those values are the things that are the most likely to bring you success in life. Like, really, integrity, excellence, teamwork. And those are the big things that push them. And integrity in particular, Goldman is always about, like, always go the extra mile. Like, if there's a law or there's a regulation involved, we want to go further than we have to on it. Like, it did come back to 20 to 43. I think I'm glad that I didn't take a trade there. So they care about their reputation so much. Like, they talk about reputation and they focus on that so much. And then the things keep happening to tarnish their reputation. Over and over again. They're taking the brunt of the reputational damage in the financial industry. And I kind of thought that maybe they were beyond it. And this isn't like they did something wrong, but does it hurt their reputation? I think it does. So that's why I'm a little concerned about it. I wonder, so if I come over here to Reddit, see, I bet you I can come to Reddit and search for fake quitting is a fake trend. Okay, you say so. I definitely saw videos about it, but Goldman, that's at the top of my Reddit right now. Goldman, and then top in the last hour. Nope. Not anything yet. Maybe to past 24 hours? Something about Citadel did 8 MR01 collateral forms. What is the Apple Pay disaster? I don't understand what that was about. I don't think I remember that. I don't see anything about that. Apple Card growth blunders blamed for mishap in Goldman's credit card business. When an Apple Card user disputes a transaction, Goldman got more disputes than he counted on. Yeah, so so here's the thing that I think is kind of funny about this, right? Is that it seems to me that the customer that Goldman's banking service drew in was not the best customer segment, was it? Like, they were all like in on Apple, and I think kind of going for a more highbrow audience of sorts. And That's not what they got. They got people that were like kind of annoying to have as customers. Well, that's what's going to happen. You do Apple. I don't like Apple stuff. I'm not necessarily a huge fan of the Apple community either for those reasons. They're kind of like, they think that they're better than other people, but they're not. They're just less aware of what their actual technology level is. Subprime crap, and now no one is paying them. I mean, I think that the bigger issue that they're having here, though, where we're looking at this from an investment thesis perspective, like, just because Goldman is really good at what they do doesn't mean that they're good at consumer banking yet, because they don't necessarily have the experience. Why would Microsoft SharePoint be sending out a message on my machine? Anyways, it's going to take them a while to get good at consumer banking. And I guess some of those problems were the technology side. That's my buddies at the bank. I'm kind of have to, if I see them on the street, I'm going to be like, dude, what the F is going on? You're killing me here. You're killing me, Smalls. Because let's see here today. Well, so if I go on like a daily basis, yeah, Goldman down slightly today, even though the S&P 500 is kind of recovering. It's no good. It's no good, although they are up. Pretty good, pretty darn good. Actually, almost 20% since the July lows, so. But that's where I get a little scared, is like, okay, if they go to new lows, this turns into a pile on Goldman. So like, I don't know if I have enough information to sit down and be like that's what's going to happen and like make a trade based off of it and everything. But if the media all piles in on Goldman again, that's going to be really bad. Like, think about how bad it was for, sorry, what is for Zillow? Think about how bad it was for Zillow, and people will pile on Goldman like 10 times that. But for now, we just kind of have to mark it as a risk. Yeah, I don't know. I guess what really should happen is I should go and get one of their credit cards and see what it's like, how good their actual service is. Because is it an issue with their actual service, or is it just like the market and the segment that they got, and a bunch of other things coming together? I'm probably dwelling on it too much. So something I've been seeing in the news past few days, like there was this Putin and Xi and the Indian Prime Minister had like this summit of sorts, and like the stories that I'm seeing continue to be of like Xi and Modi kind of like telling Putin like, we don't like this war stuff, like you need to chill out. Like his allies kind of warning him basically. And I'm wondering, is that just like Western selection bias, you know, trying to bias us towards saying, see, like the whole world is abandoning Putin. I don't know. But like Trading Floor Audio is retweeting that. So this song ain't bad. Am I really still on the lo-fi playlist though? There's another downtick. So, what kept me out of that trade? Well, part of it was being too slow, but part of it was it being Friday. Part of it was I didn't like the liquidity conditions there. Part of it was that I was still not a complete believer in what was moving this. Should I have taken a trade there or not? I mean, I could have made $10 off of it, but I don't know if I would have taken the profits at 42, right? I probably would have been looking for it to go, because when it came down there, I was thinking like, maybe I should jump on. Could have easily have jumped on. So I'm not going to say that I was awesome trading, but maybe I'm better. Maybe I'm doing better at it than I think. Maybe. Oh, hey, you know what? I'm just remembering. Well, because we're coming towards the end here, I should probably go and do my rundown of what's going on here. But how did our poll go? Recession 2023, 26 votes, 88% of you say yes. Only 12% of you say no. So once again, I ask, if 86% of us think that we're going into a recession, why are we not selling everything today? I don't know. Maybe we're just dumb. Let's come in and take a look at the markets, all right? Well, I think the one that stands out to me the most here is gold. Look at gold. So let's come to more of a volume profile. Look at it. That's a really encouraging pushback in gold, retracing the awful action that they had yesterday. And when we look in the treasuries, yeah, you know, treasury pushing the highs of yesterday, but not quite getting back to some of these like breakout levels. So maybe there still is some resistance. Although I would say every time that it's come up here and done this, they haven't really tried to push through it. They just kind of like stopped there. So oil, not really doing anything too interesting today. Natural gas maybe a little bit further down, and copper is having a good run as well. And just coming in and looking at things, silver, biggest winner today, silver followed by copper. Well, that's good. But the biggest loser today, natural gas and RTY. RTY down 1.24%. So even though, I mean, like it looks okay in the S&P 500, but it's not very good. Also want to remind you, subscribe, click the bell icon. You want to be able to find the stream more easily. Don't want to miss any of the videos. Hit the like button. It helps the stream out a lot. And check out the links in the video description, because those will help you out a lot. You get $100 off of Jigsaw. So if you're going to buy Jigsaw, you got to use the coupon, dude. I mean, you get $100 off one way or another, but you might as well do it when you're purchasing it, right? So take advantage of that. We also have a good news squawk that is the most affordable news squawk down in there in the video description, and my NinjaTrader indicators. And soon I'll have the link for the free ones, but I want to do a little bit more cleanup of them this weekend, and then I'll put that link out there for you so you can download the free ones. Probably I should include more stuff in the free ones. So if there's stuff that you want in the free ones, you let me know. All right, well, if you still believed in the upside in the treasuries here, I think that maybe in the next 15 minutes, you could probably buy it around here. Well, really anything below like the 27.5 is probably okay. There was some iceberging at 26.5. So that's curious. Although overall, I don't think that now would be a great time for a trade just because it's Friday, right? Even though it's a quad witching, it's still like it gets harder and harder for a retail trader to make money. Look at the dollar is just getting creamed here. Something's definitely going on. Are we getting let's just check zero hedge real quick. See if there's no, I'm not seeing it. It seems like something's going on here. Thing is that the strength is coming from the euro, not from the Japanese yen. So what do you make of that one? I don't know. Stay on your toes, guys. There's something going on here with the euro. But I think it's time for me to get going. So I will see you guys next week. And in the meantime, stay excellent, team.